it's get out of your own way and keep it simple. Don't overanalyze. That would be my advice there. Get out of your own way. You know, the decision, the good outcome or the right decision is usually there if you get out of your way to find it. In short.
Welcome back, everyone. I'm sitting down today in VFS Group with James Whelan and Daniel Moss. We want to talk about a little bit more institutional trading today, some things that they do here. They have a lot of good things that they work on and some big progress. So welcome. Well, actually, thank you for welcoming me here, James. So you were saying the fact that, so you just moved office last year. And I think a big difference is that you said you had a few different people before, but now you work only with traders, right?
Well, we took, and I'll let Danny go into this a bit more, we had some extraneous divisions that we're still associated with, but we're now geographically separated from them in this move. So right here is anyway, Danny, I'll let you take it away on that. So.
Oh, look, I mean, after 10 or 12 years in the CBD, it sort of got a little bit stale in there. As James was saying, we had a few different business units running concurrently, but the move out of the CBD into where we are now in Darlinghurst has enabled us to sort of tighten up our team a little bit and allow us to really focus more on the investments we make and the investment strategy behind it. And just that move in geography has created a different environment for the culture to sort of develop and all the people who are involved in that.
Nice. So what's being done here exactly? Is it trading, investing, is it research more, or is it the execution that's done, or everything?
All of the above. So everything you just mentioned is from investment strategy, from research, from decision, from execution, managing clients' wealth is what we do here.
Awesome. And I think people are going to wonder a little bit about how it works in an institution when you trade or when you research. So can you kind of tell a bit of the tasks that some people do here and what's involved when you trade in an institution like this?
Yeah, I mean we've got a number of guys and girls who work on the floor from a trading perspective, and that the word trading perspective sort of is quite encompassing. So that doesn't include people who specialise in the research side of things. We have specific traders who actually execute decisions. They pull the trigger on the market or whichever market we're trading at the time, and they make sure that we're doing the right, sort of risk-return style transactions and making sure we're managing our clients' money appropriately and everyone's getting the right allocation, position sizes, and so on. And that's sort of some of the main functions in terms of research and execution and portfolio management. So the portfolio managers are day-to-day dealing with clients and dealing with the traders to make sure the positions are getting done effectively, and then research ties in with everybody. Is that sort of a fair analogy there?
That's a fair assessment of that one, yeah.
Awesome. And for people that would like to work in an environment like this, what do you think, what do you look for? What do they have to do exactly to be hired?
So everybody who works here has experience in the markets, and that ranges from people who have worked from client side, people who have worked more on the analytical side or the research side, and we look for somebody who's driven, because the only way to build a company successfully is through hard work, and that's all there is to it. So we look for people who are ready to work hard.
If I can add to that as well, the number of people that we turn away just on a cultural basis before even coming through to have a look at the place is immense. I don't want to give a number on that one, but it's culture first for us on the team and us on the floor, and not to put words in Danny's mouth on this one either, but yes, hard work, experience, and all of those, that's all sort of an assumed knowledge basis that you should be. But if you're not one of the team, and if you're not going to be able to fit in, if you can't leave your ego at the door, then it's really not for us, because we're not that sort of shop. We're all working in the same direction. There's no individual battles, there's no individual teams that are going on. If we're not all steering in the same way, then this place doesn't work. And so that's the important part of us, is making sure that mentality is continually in the right direction, the mentality is constantly to achieve the best result for the client and not for the broker, and not trying to fill our own pockets.
Yeah, so I think that culture is pretty important in a company like this, like in any company pretty much.
Yeah, especially where you're in a foxhole now.
Yeah.
There's no big spread open space where we're in this, not in this room, in a different room that's there, and there's space, but we're in each other's pockets. We need to know exactly what's going on, because someone will see something in the US market that relates to what's going on in Europe, and the guy who needs to focus on Europe at the moment needs to be focused on the On the Australian asset, it's the opposite. For example, we all need to know what's going on. It's and be in each other's pockets. If there's any battles that's going on, it just doesn't work.
Yeah, definitely. How's the communication in a team like this? People talk a lot. Some people say that they prefer to trade privately, prefer to do the stuff like on their own.
Yeah.
But some people prefer having opinion from other people, talk with other people.
It's a very collaborative approach.
Okay.
It's a very collaborative approach. Okay. There's a lot of communication. Without question, got to be one of our strongest suits.
Yeah.
Everybody on the floor knows each other very well, and we've over time developed a communication style so that we can all communicate effectively with one another in order to get to the right decision at the end. So often there's times when people's decisions will be challenged. I think that's important in terms of getting to that best outcome for the client.
Yeah, it's not quite. I remember Ray Dalio at his place has got that. They've got that continual challenging the whole way. It's in that direction, not quite as affronting. There's this very criticise it until it's blue, and if you can't defend it, then why did you come to the room with this idea? With us, it's more like, okay, if you can get through just the first levels, then we're all on board, and then it's usually a pretty good idea. Without tearing it apart.
So for people that kind of want to replicate this in their trading, is it something they throw an idea to someone, and then that person will kind of reply with their thoughts on it?
Yeah, you've got to have a sounding board, and I noticed I think we were talking before. Sometimes I'll come up with an idea and I'll go through it, and if I don't sound it off someone, there's more likelihood that it will be a loser as opposed to a winner.
Okay.
And usually it's through that, just an easy sort of sounding board. Okay, go through it, justify it. What's your idea? What's your backing behind it? And a lot of the time it's exiting something as opposed to entering something. It's why are you exiting this situation? Okay. Are you at a profit? Are you at a loss? Why are you at this situation? As opposed to having hard stops or hard exits. For myself, has the narrative changed? Has the story behind this idea changed? And if you don't bounce it off someone, it's just you bouncing around in your own head. Okay. And what happens to people if they just get lost inside their own head?
Yeah.
Everyone's idea seems great if it's just you on your own. So that's what that is. It's very collaborative. That being said, sometimes I do put the noise cancelling headphones on and just have to focus on my own stuff.
Okay, that's big. So what I see here is that there's a lot of there's a lot of communication to determine exit or determine like trade or investment direction, like what you do with them. So the thing is now you're using algos or quantitative trading to trade and to look for different markets, like you said. So how does that combine with kind of communication and determining when to do things?
What do you want to talk about there?
I mean, a lot of the decisions we'll make will be mechanically driven. So we're often running noise in the background of any other markets out there that we're paying attention to, and we're looking to follow the momentum around the markets, and we're looking at where the money is flowing and where the strength is. So a lot of that's driven not necessarily by algorithms, but by analysing data, and that is sort of one of the beginning points of our research to decide on where we're going to be when we're going to be moving around the market.
So the portion of portfolios is based on, yes, we see the research and we see where this market is moving. We want to take a few ideas on it, and then another portion of portfolios is opening up and is getting larger and is dedicated to. It's opening up and it's being dedicated to a quant-driven momentum strategy that we have. That part of it is through the options market as an income generator through selling premium in, for example, gold, the options over the gold futures, the SPY futures, things like that. SPX futures. We've also got another one that chooses the best directions via the ETF market. Okay. So when was it, October, November, when we triggered into gold, and we've held that position since, that's, for example, it just says, based on a momentum indicator, go into this. Follow that rule, and we still check our guts on these things and just go, just because the computer spits out a thing for this part of the portfolio and says it needs to be in gold, or it needs to be short, or it needs to be in US dollars, we don't just follow that blindly. You have to actually check it and just go, okay, is this actually what we want our clients to be in at the moment? For the most part it is, because the computer is right more than it's wrong. Yeah. So,
and I guess the hard part is going to be, if you want to go against the algo, then you have to really justify and have a clear reason.
Because you better really know what you're talking about if that's the case.
Yeah. I mean, throughout that period, late last year, we had exposure at a very defensive level. So we had US dollars, we had 2 cash positions, and we had gold in that portion of the strategy, outperformed market significantly in the back end of last year, which was obviously good, considering how volatile they were. And a lot of that was driven by that quant momentum indicator that kept us out of the market. So it's not always about necessarily finding where to put money into the market. Sometimes it's stepping back, being a bit more defensive. And that was driven entirely by our quant program there.
Nice. So when and how did you decide to build an algo, and how did that happen exactly?
It's been a couple of years we've been working on this. But you don't just decide to build an algo and then tomorrow you have an algo. You back test data, you go back to the drawing board, you sample it, you test it, is it working? Can you make it better? What can you do to tune it harder and make it perform better results basically? So it's been years in the making. Basically is the short answer.
Yeah. So was there a point when you decided to work on this and to make this happen? Or?
Yeah, years ago, about 3 years ago, we started looking into it and then deciding, okay, so there's algos, but do you want to create an actual algo that competes against all the other computer programs out there and is based on speed, or how can we play to our strengths a bit more, or how can we use a bit more of our market knowledge to work with the program to build something that can outperform. So as I said, a couple of years ago we started doing it, and then it's been a long road of building and testing and going back to the drawing board and scrapping that and starting again and so on. But we've been running it for about 2 years now. It's been performing very well.
Mm-hmm. Yeah, the thing I like is that you combine both, like the best of manual trading and algo trading. So kind of having an algo to help you, but still doing the manual work to kind of have your edge there. Also.
Yeah, and the edge on execution is important too, and that the system that we use is quite strong to make sure that we've got the edge on the execution, and that we can actually trade into these global markets. So I was just actually having a quick flash to the performance on this as well. You okay with those numbers?
Yeah, go ahead.
That's right. So in December we were up just over 3%, which is pretty good for that December. Then in November we're up 3.5%, just on that strategy, on the ETF strategy. So it's
compared to what markets did in that period.
Which I still shudder to think about what actually happened in the market in that period. So that was quite good. And so if you're going to go against those signals, then you better have a good reason as to why you want to go against those signals. But the platform that we use is quite strong. The signals are quite strong. It's why would you want to get in its way?
Okay.
So it's just tweaking it, make sure it's absolutely perfect now. And the exits are important to that as well. Make sure the exits are right.
Okay. So how does the algo work? So basically you get, you report daily about what you should be into, or every week, every month?
Look, we're monitoring things daily. We'll be usually making decisions on a weekly basis, and sometimes those decisions will do nothing. And that's what the decision ends up being. But we monitor it daily. We live and breathe on the markets, so we're constantly analysing data from around the globe on a daily basis, and usually on a weekly basis when we'll look to actually make a change or execute something. But often we're happy and comfortable in positions. Like for instance, back end of last year, there was a lot of no change, just hold position. So that's what we did. So there are plenty of times when we don't actually do anything. But it is something we monitor daily and look to make decisions weekly if we need to.
And so you mentioned data. What kind of data do we look for around the world?
Well, so primarily driven by price, and that's not the assets that we tend to utilise are industry based. So we look at global markets on an index level, watching commodities and currencies are the main inputs into that, and it's primarily driven by price and momentum.
So you watch for what these things are doing, and then you would have ideas of what to trade with that. Is that the process, like getting ideas to trade? So the algos and then the data, and then you would find a way to trade? Or?
That's there's a little bit more to it, but
So I kind of want you to expand the process generally. What does that involve?
Again, it's following price and following momentum, looking to see where the strength in the market is, and the idea is that we'll always be investing in the strongest asset classes. That's how that's driven, and often at times of high volatility, the strongest asset classes are your defensive classes. Your gold, US dollars, short positions in the US, on the S&P 500, for example. So it's the primary driver is price and momentum across the assets that we cover.
And that's the decision you make for a few months. So you will invest in things for some time.
We'll invest in it for as long as it's the strongest asset class.
Okay.
If that changes, then we'll change. If it doesn't change, we don't have a reason to change, because it means we're in the strongest asset class and we don't need to be adjusting it. We need to be monitoring it to make sure we remain in that position. But as I said, if we aren't making changes to our strategy, it means that we're in the strong asset classes. And there's no reason to change that. There's no reason to, it's a very old adage, but if the trend is, if you're on it and it's going in the right direction, don't change it. Don't get in the way of that. Exactly. That's how you can make long-term solid profits.
Okay, and that's where the communication in the team is really important to be able to know when to exit.
100%.
Talk about it.
Yeah, very much
Awesome.
so. Very much so.
How much is the technical aspect of like looking at the charts and deciding on maybe some patterns into the investment? Is that important or?
Yeah, I mean, we do look for it from an entry and exit perspective, definitely, especially on an exit level. We might use some other technical indicators to govern an exit decision. If we think something has moved too hard, too fast, and we think there's a good amount of profit on the table today, and we can look at taking that and then possibly re-entering, watching technical levels. But for the most part, again, looking for the strongest asset classes, whichever they may be.
Mm-hmm. And you have people in the team that are specialized into technical analysis and some other like maybe research or fundamentals? Or is it all pretty much mixed?
No, it's not mixed. We have people who specialize in the fields. We like people to be cross-skilled or cross-educated and work with each other. And if there's someone who's stronger in an area, we want them to work with someone who's weaker, so we can build the overall level of the team. You're only as good as the weakest link.
Thanks, Dave.
But in saying that, we do like people to be across all the portfolios and across all of our investments. But there will be leaders in each of the specified fields, be that portfolio management, client-facing, research, technicals. They'll be covered.
Mm-hmm. Is there any topic we didn't cover that you'd like to touch on or talk about? Anything that you feel like people should know about this industry? And
no, I mean the industry is moving into another hurdle, specifically with regards to retail advising. We're moving into another phase of regulation and regulatory change. That for us is going to. There may be hurdles, there may be challenges that are ahead for us, and there are going to be challenges for anyone moving into the industry now that we'll have to face. Where that's just going to be the norm with regards to regulation. Necessary regulation, obviously, depending on what it is that comes through, but nonetheless, a lot of it is just based on making sure that your boxes are checked, making sure your T's are crossed and your I's are dotted on that, and trying to maintain a focus on what you're actually supposed to be doing for the client with regards to generating wealth and preserving capital. Which, don't forget, the most important thing is preserving capital. That focus, sometimes you've got to try and maintain that focus physically in the face of the amount of regulation that you need to be aware of. So that's just it's easy in this industry for a lot of people to say we're focused on this law, we're focused on this regulation, we're doing it, and forget about the client. We're still trying to maintain our focus here on the client while we go.
Yeah, and that's something we have learned, the fact that there's a lot of trading and investing involved, but it's also a lot about communicating with clients. So how does that work here? Is there someone like talking with them on a frequent basis?
So we have our managed discretionary accounts, and a big part of what we do is based on a discretionary basis. And that being done, we're still trying to be as aware as possible, and that you can't just take your clients for granted when they're on a discretionary basis, that you need to actually communicate as much as possible with them. Obviously you need to tell them what's going on and what the results are, but also to just communicating with them on the way that you would any client. And then we've got our directly managed accounts,
individually managed accounts.
And we have a pretty high level of communication with them a few times a week usually.
Is it a fairly like formal communication, or is it more?
Look, there's both aspects. From an individually managed account perspective, we're touching base, emails, text messages, liaising with clients that way. But a lot of the time we try to make, where we can, phone calls or even face-to-face with clients, and to review portfolios regularly. So we do formal reviews of people, obviously, as regulation stipulates, on an annual basis or a quarterly basis or whatever it may be. But we like to do as much as we can sort of face-to-face where possible. This isn't a robo-advisory firm. There's people here, and our clients are people as well. So, that's the idea. We're trying to keep that relationship strong, keep the communication strong, let them know what we're doing and why we're doing it. And again, same as we have ideas challenged by other portfolio managers on the floor. If a client challenges an idea, we need to be able to speak to why we're doing it and validate our decision-making process with them as well, because at the end of the day, we are the custodians of their wealth, and we take that pretty seriously.
Yeah. How do you handle the tough times, like the drawdowns? Is it the same thing as a normal period of wins, or different? So how do you deal with drawdowns, or if
there are times markets, asset prices go up and down. Obviously, people have different clients have different timeframes of investment, obviously. So, we juggle the strategy or the allocation to the different strategies around that investment time horizon. So, if you have a younger client who's got lots of years left to work and continue to generate income, higher level of risk, their strategy may look different from someone who's more, transitioning to retirement and looking to build up income streams. So there's different avenues and different ways of dealing with it, but, there's markets go up and markets go down. There's a long and short of it, but you need to manage that risk appropriately, and then obviously keep in discussion with our clients as to what we're doing and why we're doing it.
What does it take for someone to invest, let's say, here in the fund? Do they have like pre-requirement? Because do they have to be comfortable with like the risk involved, or do you like require that they have a minimum income to invest, or how does that work?
Yeah, all of the above. I mean, so we'll meet a client and we'll obviously go through a process to establish where they fit within VFS. So as I said, as we have younger clients who have a higher tolerance to risk, their investment time horizon is much different to someone who's at the tail end of their working life. And then we fill out risk profiles together. We work up and develop an investment mandate on something that we think is appropriate for them and that they're comfortable and understanding with. And then that forms the basis of our investment mandate and how we're going to be investing the money thereafter. So
how do you find out the risk profile of someone, or because I guess it's work with like a trader too, they have to find out how much they can risk themselves on a trade or on a drawdown?
Yeah, I mean, so we work through with client questionnaires, so we establish some basic questions as to what their risk profile would be.
And these are things that you have here for your company, or it's like a general thing that
financial questionnaires such as this are pretty common for retail advisory, especially when dealing with an MDA or a managed discretionary account style portfolio. So yes, we have our own one, but it's not unique to the industry. It's a pretty commonplace.
Awesome, cool. How can you find you? Can I go to you or reach out to you?
Our website vfsgroup.com.au has the details that we can be on. My email address, I have GMF because I run a global macro fund. I'm GMF@vfsgroup.com.au, and I can handle anything that goes through onto that.
Perfect.
But the website's got all the details that you need, all those sorts of things. Is there anything else you need to know?
And you're on Twitter as well.
And I'm on the Twitter as well. Yes. At what is it? At James Whelan 42.
Yeah, we'll put some links below in the video.
Yeah, we'll put some links on there. My Twitter, I've actually now started on Monday on the bus coming into work. I now delete Twitter from my phone.
Okay.
So it's only available when I'm there or when I'm at my desk or when I'm at home. But so there's just no Twitter on my phone anymore. And I found my productivity has gone through the roof.
Okay.
and I'm not listening to any of the noise or anything like that anymore.
That's awesome.
Because someone's always got a view on what one of your trades is or one of your ideas, so it's sitting at my desk for a work tool now, and that's it. So a lot of my nonsense tweets have now.
Start focusing on what you know you should do.
Yeah.
Plus productivity, not being distracted by other things.
That's right. Yeah.
Awesome.
Just trying to cut out some of the distraction.
Just
focusing on what actually helps us and helps our clients, and just getting out of your own way is one of Danny's expressions. Just the number of things that people do that just puts own roadblocks in front of yourself from getting to your goals. When you realise just how many of those things that you do, and you start taking them out of the way, this light appears in front of you. So that's what we're focusing on. That's what I'm focusing on in 2019.
That's awesome.
Yeah.
And I have this one question I've asked all my guests on the podcast before, and I've asked you probably before, so maybe you can answer. The question is, if you could give traders one piece of advice on how they can thrive as traders, what would that one piece of advice be?
As James just said, it's get out of your own way and keep it simple. Don't overanalyze. That would be my advice there. Get out of your own way. The decision, the good outcome or the right decision is usually there if you get out of your way to find it. In short.
That's it. So thank you guys. I appreciate it.
Thanks, Etienne.
Thank you.
Thank you.
Cheers.
And we'll catch you guys pretty soon.